Delete your stochastic RSI indicator once and for all, because the indicator I'm about to show you in this video is 10 times more effective. It will bring you more gains and make the trading process a lot easier. In this video, we'll explore what this secret indicator is, how it works, and combine it with other technical analysis tools to create a super profitable trading strategy. This is without a doubt one of the most accurate and easy-to-use oscillators on the TradingView platform. The smoothing technique used in this indicator ensures an accurate, no-lag reading. The oscillator gives early overbought and oversold signals displayed in the upper and lower bands. These types of signals occur when the market makes an extreme or unusual move to the upside or downside. Okay, this is all theory. Let's look at a real example of how we can prepare ourselves for shorting a security based on the overbought signal given by the oscillator. It is important to remember that before looking at the oscillator's signals, we need to check the market structure. This simple trick will skyrocket your winning ratio. As with any TradingView indicator, you cannot solely rely on their buy or sell signals. No indicator is 100% accurate. However, we can get our strategy's winning ratio close to 80 or even 90% by following the next steps. First, identify the long-term trend. You can do this by switching the time frame from current to 4 hours or daily. If the price keeps making lower highs, the trend is bearish. The second step is to spot the major resistance zone. I use the word zone instead of level, since there are price manipulations such as liquidity sweeps which result in fake breakouts. Once such a resistance zone has been identified and the price struggles to break through it, check the oscillator for an overbought signal. Overbought market conditions are indicated by a blue shape in the upper red zone. However, don't rush into selling. Wait for the shape to fully complete itself, as you don't want to sell if the price keeps rising. In the next example, a similar profitable pattern occurred. Once you start putting the knowledge you gained from this tutorial into practice, you'll be amazed at how accurate your trade entries become. You'll be able to see these patterns instantly and act on them accordingly. Similarly, you can purchase a security at the right time based on the oversold signals issued by the indicator and basic price action analysis. First, spot an uptrend. In an uptrend, the price makes higher lows. It is essential to check the higher time frames to confirm the bias. Later in this video, I'll show you a cheat code to spot the trend easily and accurately. Stay with me. Once the uptrend has been identified, draw a support zone. Here we see that this major resistance zone was broken and the price returned to it to fill more buy orders. This caused a price increase once. We can anticipate a similar outcome again as the price returns to this area. To confirm our prediction, we check the oscillator for an oversold signal. Wait for the shape to fully complete itself, as you don't want to buy if the price keeps falling. Another super powerful component of this indicator are these trend-following waves. Trend-following waves allow you to anticipate the current market state. If the wave is green, the market is in a strong uptrend. A purple wave indicates a bear market. The unique shape of the oscillator can really help you see when a trend is weakening. This happens when the oscillator flatlines. Histograms can also play a significant role in determining trend strength. Besides all these amazing features, the indicator comes with auto divergences, which can be enabled in the indicator inputs. Here, you can also select how fast you want the oscillator to react to price changes. In short time frames like 1, 5, and 15 minutes, I recommend setting the oscillator speed as leisure to avoid fake signals. Here's my personal strategy with auto divergences. Instead of considering every divergence as a buy or sell signal, I filter them out by checking for overbought and oversold conditions first. For instance, a bullish divergence can be taken into account as a buy alert only if it appears after an oversold signal. Similarly, a bearish divergence can be considered as a sell signal only after an overbought condition. The TradeIQ oscillator works in all time frames. It can be used as a trend filter or even a buy and sell confirmation indicator. Personally, I recommend combining it with the TradeIQ toolkit. This combination of indicators works perfectly well. Unlike other indicators that focus on specific aspects of trading, the TradeIQ tool offers a multidimensional approach. It combines price action analysis, trend detection, and volumetric analysis, offering a more comprehensive view of the market than any single indicator you know. It includes features like supply and demand analysis, trade entries with targets and stop losses, and trend lines with breakouts. Here's one of the most reliable trading strategies with TradingView Indicators. It works especially well in short time frames. Before I explain the rules, we must perform the following customizations. Access the TradingView oscillator settings and change the oscillator speed to rapid. Open the TradingView toolkit settings and enable the 1-hour supply and demand zones. Hide the order blocks. The rest of the settings should remain default. Let's uncover the rules for opening a long trade. Rule number 1. The TradingView toolkit issues a long signal. Second rule. At the time the signal is given, the trend following wave must be green. Rule number 3. The trend bias score must be above 60 in at least 3 time frames. You can use trend lines, supply and demand zones for additional confluences. Set the stop loss and profit targets at the recommended prices. If the trend following wave had flattened by the time a long signal was issued, it's better to skip such a signal. If the oscillator is purple at the time a signal is given, you can wait maximum 3 candles for it to turn green. Here's another good example of a long trade where we wait for the oscillator to catch up. So, a long signal is issued. The trend is positive in 3 time frames, but the trend following line is purple. Let's give it some extra time to catch up. Within 2 candles, the line turned green, signaling the beginning of a bullish trend. The next example shows how to go short with this trading strategy. First, the TradingView toolkit produces a short signal. Second rule. When the signal is produced, the trend following wave must be purple. Third rule. The trend bias score must be below 40 in at least 3 time frames. Set stop loss and take profit targets. If the trend following wave has flattened by the time a short signal was issued, it's better to skip such a trade. If the oscillator is green at the time a signal is given, you can wait maximum 3 candles for it to turn purple. A bearish divergence that occurs during a short signal is also strong confirmation. This was one of many profitable trading strategies with TradingView Indicators. For those of you who can't wait to try them out, click the first link in the description and get your TradingView tools risk-free.